Good afternoon, everyone, and welcome to the very last session of Strategy and Stock Picks Q1 2026. In today's session is on the Japan's market. You may take a look at the agenda stated in the slides later. Also, to not forget, if you don't know, we have a special giveaway this round. Just need to scan the QR code on your bottom left corner to follow our TikTok account and then read the instruction on the post caption to win home a Sony noise cancelling headphones. A gentle reminder for you to submit your questions in the Q&A section. You may also upvote other participants' questions. Questions with the highest number of votes will be selected by our speaker. And for those of you who are attending from YouTube Live, you may also join in on Zoom with us from the link we pinned in the comment section. We still have a bit of time before the webinar begins, so sit back, relax, and our speaker will begin shortly. For those of you who just joined, welcome. Good afternoon. Gentle reminder for you to submit your questions in the Q&A box during the session, and our speaker will tend to it after his presentation. If you haven't already joined our giveaway, scan the QR code on your bottom left corner to win home a Sony noise cancelling headphones. Okay, without further ado, let's begin the webinar. For this session, we have Mr. Tomoyuki Misumi, Research Analyst of PhillipCapital Japan, to cover the Japan market outlook. Misumi-san, you may take over.
Good afternoon, everyone. This is Tomoyuki Misumi of PhillipCapital Japan. I'm research analyst of the research department. Let's talk about the current Japanese market and also macroeconomic condition and sector overviews. And I also present to the my student portfolios and performance of student portfolios, and also about new next portfolio and new stock picks. Let's start. Okay. Okay, trades overview is that the stuff from index and currency overview, and also I have a politics and macroeconomics, also adds some corporate actions rather than expecting, and also industry theme and sector performance, more portfolio performance. So I have to be doing my accountability, and stock pick and news bond report is presented in the last and the later of the sessions. Okay, start from the stock index and interest rate, and also about currencies, or maybe the interest rate is in the macroeconomic part. So there are the abbreviations that are often used. The calendar year is CY, fiscal year is fiscal year. Calendar year is start from January to end in December, but fiscal year may be end in March, or depends on its corporate. And I also use YR, this is X years. TTM, the trailing 12 months, I often use that. Often trailing 12 months is also equivalent to the last 1 year's revenue, but I always use sales. Gross profit margin is OPM. The operating profit margin is OPM. And net income is a net income after tax. Okay. Here is the Nikkei 235 and topics. There's a large difference after it from the mid of the 2025, and also find the Nikkei topical multiple. Its average is almost 14, but just in the mid of the November, there's also 15, soaring 15, and now it's converting to their average. So we have to know that I have to note that where there's so much difference between the topics and Nikkei. So there's a lot of lean to the top, lean on the weights. So there's a lot of most largest cap market Nikkei weight is Advantage. This is electronic appliances for silicon semiconductor industries. The testing device, so it's maturing in the price in 1 year. And the top Nikkei weight is above 10.4, 10 percentage point, while topic weight is merely 1.4%. So the Nikkei is also cited as a representative index of Japan, but actually at the cherry picking index. So to perform the portfolio or the comparable pair index is the topics. So I often refer to topics for representing Japanese stock markets. So performance at glance. So in order to visualize the many indexes for related Japanese and also Japan, and also refer to the ST threat time index, so the Singapore peoples. There are in USD term, the champion is topic small. It's the smallest small growth stock indexes is a much better perform in the and in the best performer in the 2025, and Nikkei is the next. And Topics meet 400, and STI is also a good performer. And it is surprising that S&P 500 is the more worst performer in the USD term. So let's see the performance comparison. So there's a 3-year comparison in the pricing currency and USD, and this is last year comparison of the pricing currency and USD, and also in the trade year is red one, pricing currency and USD term. So in the price, we see that there's a lot of in but meanwhile in the Japanese indexes worst performer in the USD because of depreciation of the US depreciation against the US dollar, while its performance is almost pricing same in the STI in the pricing currency in JPY. But in the 2025, it's almost it's somewhat relaxed because USD is also weakening. We see that in the next Fridays, the USD purchasing power decreased against the major currency. I take the 100 constant at January 21st in 2025. We see that some some of the currency weakened against the first half of Japan, first half of 2025. This we see that major currency like Swiss franc, euro, and the British pound is also getting stronger than the USD. Also, Singapore dollar, Australian dollar is also strong against the US dollar. Japan and Korean won are exception that almost turn into the same purchasing power in the first day of the January of last 2025. So it's maybe because of the expansionary policy of the Trump administration, and also there's some stack in the shutdown of the government, shutdown by the government, or some political uncertainty in the US. So let's see the performance compared to the USD denominated one. Let's see in also the quarterly decomposition of the performance of USD denominated performance. We see that in the first quarter, it is most of the indexes were performed in the so loss in the 2020 first quarter 2025, but it regained in the next quarter because there's some less uncertainty about tax coverage portion is tariff is also relaxed by the Trump administration. We also see that also, so same scenario is also shown in the fourth quarter of the 2025, but there's less sensitive about the tariff change. So let's see slight difference. This is the topics index that representing the some depends on its company size. The topic 30 is a core of the 30 largest market cap stocks, and large 70 is the 70 largest large cap stocks, and with 400 is the most volume stock. The 400 mid scale cap market caps. A topic small is including the small and growth one. So we see that most of the any stock index depreciating it's depreciating the first quarter, but it regained in the second quarter. So and there is some people going forward to both the largest cap and also going to the core 30 cap and also going to a small cap. And the small cap is the most performing in the third quarter. But in the fourth quarter, there's some reversion to the largest cap stock that 8.31% return in the third was 30 at 11% return in the large 70. So I also measure the risk of the price by its standard deviation of the return. So there's a daily return that almost nearly 1%, sorry, almost 1 percentage point of the Japan and there's standard deviation. So Nikkei is the most riskiest index in comparing to other three indexes. And also annualized risk is also riskiest in Nikkei. Next is topics. And the most stable index is SDI. So even it's riskier than so this is the US dollar term. And we see that there's so many, but in the anomalies, there's anomaly is that the average return plus 1 sigma. 1 sigma is daily standard deviation. So if the standard deviation means that at the 60% probability, there's a 1 plus 1.21 upside return or the negative 1.25 negative happen against the average of the returns. So if we exceed this R plus 1 sigma, this is outside anomalies. And if we see that 1 minus 1 sigma return may be loss or 1 sigma loss. So we exceeding this R minus 1 sigma loss, it may be negative anomalies. So we see that the topics is in the fourth quarter, there's so much upside is in the topics. And also Nikkei is also have anomalies in the upside. But in the first quarter, there's a more stable and also have show one negative bias in the Japanese indexes. But S&P is more severe, but it's going to be stable in the third quarter and fourth quarters. So we talk about the economic overview and politics and monetary policy. Let's start from the our GDP growth. This is a uh, this is a quarterly reporting GDP of the of Japan in both nominal and real GDP. So nominal is contains the inflation, and real is the subtract the uh, inflation effect. So we see that there's a nominal growth in the from the first quarter of the first quarter, second quarter, third quarter against uh, against the last year. So this gray line is uh, Y-over-Y growth change, but in the but we can visually see that the almost stable growth in the so or more stagnating the growth of the real GDP. So the GDP growth is almost explained by the inflation, not by the real production increase. Let's see the so this is because the inflation is almost 3%, and in deflating term in a deflated, and it is persistent. So let's see that on December that okay, this is a yield curve, JGB yield curve getting further steeper. There's also much term term premium gained in December again compared to the first January of the 2025. So let's see that the in the when we are T-bill, it is reflected by the change of the policy rate, but it's getting more steeper because of the market price, because of market expectation. So the importance is what market expect about in the long term. So it is it is common that some of the steepening there is some steepening reflecting the economic growth and also uh, economic growth, but as we see last Friday, there's a stagnating growth in real term. So we see that it may be it's likely that explain some Japanese uh fiscal burden is more concerns of in the bond market, and also exceeding the lot appreciation in the interest rate in this more longer period of time, uh but maturity. So market consider policy rate raise likely in mid 2026. The probability of policy rate change. This is implied by the forward rate. This is indirectly derived by the forward rate. Is the probability that indirectly derived by the forward rate. So by calculation problem, it may exceeding the 100 percentage, but it is good indicator that how markets consider about the likeliness of the BOJ rate, the policy rate change. It is in the mid, it is more likely to be 100 percentage, but also includes the hedging, uh, demand for hedging. So, uh, so uh, well, this is let's go into next. Also, Fed may cut rates in mid 2006 by market speculation. This is a negative rate, negative probability. Negative probability suggests a policy rate cut. So this is almost same timing in the. So in this speculation, uh, Fed may cut rates and BOJ may cut rates almost simultaneously, or even even BOJ may go later in the go later greater at the FRB. So if ARB latest hike or latest cut rates, BOJ can increase the rates so that the JPY may be appreciated. So what politics overview is that Takaichi prime administration gained public approval. So rapidly dissolve parliament. It's not likely. This she already said that dissolve parliament, but it's difficult to LDP's approval will also increase, but it is also uncertain whether this uh, dissolve, dissolving the parliament may be successful or not. So Takai's administration uh, showed a fiscal expansion policy to tackle inflation, but it is wrong. If in the inflationary economy and expansion policy may worsen inflation, and so debt increase, the latest hike. And also, many commitment to the BOJ, and we may be threat to the BOJ independence. Dilemma is that the gaining popularity and tackling inflation cannot be compatible in Takaichi administration. So BOJ and monetary policy that the policy rate raise still at easing level. So even though policy rate at rate raised in the December, but yeah, the market think is still at easing level. How the hike is still uncertain. So in the last Friday, the probability is uncertain about the mid 2026 latest hike, but there is also including a hedging demand. So it's not exactly predicting the date of the latest hike. So there's the macroeconomics that the tight demand gap and slightly negative. So maybe some corporate, it may be reflecting some production constraint. So corporate capex is like to cover labor shortage. So in Tankan, in the Japanese, this is kind of the investigation to hearing investigation by BOJ to the corporates about the expectation of the economy and the conduct to and the conduct to the next in the future. So the outlook is very prospective, but and they are willing to increase its capital expenditure and also for investment, but this is to cover the labor shortage. And frequent ad hoc reporting to Prime Minister and Cabinet and seeking approval is also reported in the media. It may be a sign of the strengthened BOJ independence. So it is likely that the policy rate may be postponed because of the some compromising to the Japanese government and care about the fiscal burden on the interest rate. So corporate action is that the sales and income grow at nominal base. It is very prospective and tariff is less burdensome than expected in the last 2025. And the inflation with JPY labor shortage forced investment in foreign entity or offshore production. Tariff influence of tariff maybe take effect in the later of 2025. It's possible. I have to mention about some prospective TSMC, Taiwan Semiconductor, our TSMC financial result is it's very prospective, and they plan to almost 3 times larger capex. So it can be 10 tailwind for the Japanese company relating to the semiconductor productions. So sector overview. Here the message presentation of the TOJ 30 sector index at glance. Already in the later slides, I decompose a group of the company sectors to represent for good representation. But we can see notably steel and metal and non-ferrous metal is good performing and outperforming other indexes. And also can see that in red line topics, and most of the index is performed better than the first year prices. So most of the indexes, most of the companies, most of the indexes, most of sectors performing better than it performed because of the inflationary economy. So technical performance is that we see that we choose three indexes as the exporting industry. It's not importing industry. It's not limited to these three indexes, three sectors, but the electric appliances is including the semiconductor industry. The almost 80% of their revenue are from the export. So let's see that in 2025, annualized average return is almost same to the actual return of the 1 year actual return. So it's better perform in the 2025, and we see some bad performance in the first quarter because of the transformation tariff, but it recovered and because of the trade administration chicken out. So, and also see electronic appliances gain further in the fourth quarter because of the good outlook of the semiconductor industries, and also for semiconductor industries, and also for changes to the advanced semiconductor chip. We see the risk and anomalies. We see in that compared to the 2026, it's slightly increased anomalies compared to 2024, but there's almost same risk structure in the 2025, and even in the TPEQ, this is automobile and transportation equipment. It includes Toyotas. It is less anomalies in 2025. It is surprising that even in the transportation tariff, there's not so much anomalies in the pricing. So machinery is relaxing the negative anomalies in 2025. So the performance of the representative company of each indexes. Advanced is test the devices of the semiconductor factories. So I see that the inflation point is a topics weight index weight is times the annual appreciation of the prices time. So there's some inflation point is 1.555%. It's bigger than the Toyota Motors. It appreciated price almost 10%, and topics weight is 3.47%, but it's big. The advantage is bigger than Toyota's appreciation, and it's more influential than Toyota's. Mid heavy industry is also influential, and it's also increased because of some speculation of defense, more speculation about the increase on the defense expense by the government. So there's a price revenue growth is spectacular in Advanced, and operating profit margin is also good. And the operating profit margin improvement is 12.48%, percentage point. It's really prospective. Let's see finance and internet and others. The bank is also a good performer in 2025, but it's less perform compared to 2024. The finance and there's a larger gap between the bank and non-bank. In the non-bank and the banking and non-bank in 2024, it is almost same returns and almost same annual return. But in the non-financial industry is less perform compared to the bank. It's also less perform compared to 2024. Internet and other services also less perform compared to 2024. It is also this industry includes a lot of internet bank and also some information and communication industries. So it performed best in the second quarter, but this is downward. This gain so loss in fourth quarter of 2024 or 25. Sorry. Let's see anomalies. We see that the bank is second best performer in the, the in the last 12 months. The financial is not bad, but it's less. Sorry, sorry. This is already riskiest. So sorry, I have to say it's riskiest one, and also second riskiest the financial, but not performing. So risk structure is that bank is surprisingly there's a negative anomalies in 2025 compared to 2024, and the financial is came to less riskier in number of days anomalies. So internet and services are getting more riskier, and there's a lot of anomalies. So there's a different company fundamentals. Mitsubishi gained the operating profit margin better, and also the Orix. This is the non-bank financial. There's a negative operating margins, and SoftBank is very good operating profit margin, but the price and price appreciates so much. But in the fourth quarter, they show negatives, and SoftBank Group is some a kind of it is disputing company because in their portfolios, a lot of investment to the open AI is included, and the OpenAI is still show us some so already exhibit a loss, operating loss, but this is price appreciated because of the reinvestment, or they gain another investment, and its evaluation is appreciated, and such appreciation is tied to the SoftBank's earnings. So it is disputing and problematic SoftBank. Why I do not. This is why I do not include the SoftBank group into my model portfolios. So sector performance. This is material industries, raw materials, chemicals. This is including a supply to the semiconductor industries, and steel and non-ferrous metals and construction materials. So there's a huge increase of the annual average return in the 2025. This is because of representing companies, Fujikura, and also some metal industries, because type to the no, metal is type to the metal is turning to the less burdensome than expected. So there's also huge increase in the expectation about the data centers and those. So let's see the risk anomalies. We see that there's a riskier in the steel and metal. There's a lot of anomalies. So the pricing, even though the business is not selling too much, except that creating the data centers, and the construction material is almost same structures and less riskier in the downside. It's going to the representing companies. So Fujikura, this is the fiber cable company that to export to the cable into the data center and hyperscalers. The Kajima is a construction company relating to the fab construction of the TSMC. So see that so Kinden Metal Company is not not so much price operating profit margin improvement, but Fujikura there's a huge price increase, huge sales increase. Even though Kajima is show decrease of the sales growth. So this is about infrastructures companies. So transportation, logistics, real estate, electric power and gas, energy resources. There's a so huge gain in the electric power and the energies because of the shortage of the increased shortage of the electricity because of data centers, and also by the increase of the electricity by the inflation and the imports of the oil and gas. So it's possible that this increase is maybe temporal, but maybe the energy increase by the data center may be lasting. So there is anomaly in infrastructures, in fuel, in electricity, they're getting less riskier. So less riskier and less anomalies means that its pricing is more stable, pricing is more legitimate. So it may be a good time to invest if the anomalies less anomalies. So let's move to the fundamental influential companies. Eastern Japan Railway is called JR, and Mitsubishi Estate. This is a real estate company that plan the development of the urban city, and the Impex is an energy company, and Kansai Power is that the electricity at the the western area of Japan. So let's see that there's a fewer improvement of the operating profit margin, and sales growth is narrow. It could be one kind of the defensives, even though the price increase is very attractive. It it may be possible that there is a mere revision of the repricing, but it's not expect incorporate its stronger growth. Let's see that depending discretionary pharmaceutical is regain its return in the fourth quarter. And sorry, wholesales is also gain in the third and fourth quarter. It may be because of the inflation remarks by the Berkshire Hathaway investment to the wholesales trading company of Japan, and food is also gaining because of the inflation. Retail trade is also gaining in the second quarter and fourth quarter, but as a whole, it is less performed than 2024. This gives anomaly is that the pharmaceutical is gain more anomalies in the both upside and downside. And there's a retail trade is also show downside anomalies. It's gaining riskier in both pharmaceutical and retail. And food and wholesale is less riskier in 2025. This is sorry, not infrastructure. It is discretionary companies, defensive and discretionary companies. This is pharmaceutical, food, and wholesale are one kind of defensive, but the infrastructure is also defensive. But retail is some discretionary uh, consumptions. So there's a few improvements of the operating profit margin, and Japan Tobacco, called JT, so exhibit a negative profit margin improve deteriorations. Sales growth is prospective, but it may be because of inflations. The nominal increase of sales happened, but it may be uh, by decrease. Operating profit may decrease because of the cost increase. So let's see model portfolios. A model portfolio construction should have some budget of 5 million. The target is topics performance exceeding topic performance, and try to create 1 million of each unit stocks. And in Japanese stock investment, we have to buy at least 100 unit stock. So every stock price is almost 100 times bigger than investments, big to the 100 times big investment size. So gross profit margin, operating profit margin is very important because compared to United States, USA company, the margins are less attractive in Japanese company. So ROIC spread is also positive important. There's some economic earnings, economic profit, the exceeding capital cost. So preference of domestic market exporting company is considered in 2025 because of some exporting company may suffer from the tariffs, and some reversion to the domestic company may occur, is in my hypothesis. So the annual performance of the my model portfolio, it showed a 26.99% growth, but it's almost driven by the advantage. It's also already exceeding the budget of 100 or 1 million into stock. SBI and Anycar is also driven the growth, but almost same in the cover, almost competitor of the Anycar show a negative return. And it's also abandoned to go to the prime market of the Tokyo Stock Exchange. So this is because of its margin and its revenue is attractive, so it's attractive, but in some the failure of talent management is reflected in the price, so they show a negative decrease. Dodo is also have a very attractive margins and attractive ROE, capital return, but the sales growth is not good. So, and it's also Pepsi Dream are my favorite stock pick. Montaro is also attractive margins, but maybe possible. I think that it's not fit to the inflationary scenarios. So stock performance is, but compared to the topic, it's a slight outperformance, and in some period, there's underperforming period is observed in the last 12 months. So there are the financial result. Capcom YOY growth is negative in the quarterly base, and but the net income will increase. The fifth stream is turned to be negative profit, turned to be loss, operating loss, but there's no perspective that is gain the profit again. So though it's a stable, stable growth of the revenue, and but there show some but it shows a profit loss, of margin deteriorations. Chugai Pharma is finally going to the good performer, a good operating, good sales, and also income increase, income growth. So let's go into a new stock pick and sorry, this is not 2025, this is 2026. Our investments primary this strategy. Monitor for large cap may continue first quarter 2026, but maybe in the one quarter momentum, end up in one quarter momentum. This may be triggered by NVIDIA new product. I think the silicon cycle is no longer holds in the global because uh, compared to the past, the Intel is no longer dominant company in both production and its product cycle. The TSMC is dominant in the silicon production, and the developer is also by the NVIDIA, Apple, ARM, and also Alphabet by Google. And present persistent as weak JPY and DRAM scarcity. This is DRAM is a memory that is required in large quantity in data centers. The DRAM is also applicable in many forms of the products, like automobile and some electric appliances. So there are also social inflations. Companies choose to invest in foreign entity rather than domestic capital expenditure as the inflation worsens and the Japanese yen weaken. So the company difficult to gain the constant constant input. So have to go into the foreign entity and contract the foreign entity and doing business in the foreign entity. So labor scarcity lasts long. This is also the momentum and also a motivation for company to go into the foreign. Japan's strength is IP exporting content and service cultures. Non-bank investment focus is stock market. So the stock rate hike is maybe postponed. So the stock market is the next focus. So strategic focus on stock selection criteria. Thematic focus is that AI data center export-driven company, AIDC, human resource and back office solutions, exporting Japanese entertainment IP, JEIP, and consumers inflation adjustment, GIF. So fundamental focus is sales growth and margin attractive, both with servable ROIC spread, mode of economic mode is economic mode that can create some defensives from the competitors and also create the economic profit to the shareholders and bondholders. The sigma means that the standard deviation ROIC at 5-year fiscal year. So ROIC minus 1 sigma is also important. So constraint change. So English disclosure is available in fair timing and sufficiency. This is math. But we change the budget 5 million to 10 million JPY. Unit price is 1 million to around 202 million JPY because advantage exceeding this budget. But I think that we should focus on advantage as plays for next one quarters. Investable scale is bigger than 100 million JPY market cap, covered by more than 3 analysts. So let's see our new stock pick, but some of the including the last stock pick and also the past stock pick. USS is one of the stock pick, and Lux is the back office of the system solutions, and Fujikura is the data center cable suppliers. Advantage is also LPD appliances for semiconductors. Kioxia is memories companies. It's not a DRAM, it's not a DRAM, it's a production for the solid-state drive for memory storage. This is in the past. This is the entity of the Toshiba Group, but it's divested, and going to be independent. We continue to include Anycolor, but drop covers. The Sanrio also includes Sanrio, and Capcom is also continue. SPI also continues because for the stock gain on the stock market appreciation. So new stock pick strategic fit is that the PAL Group, this is apparel retail company that affordable price apparel grocery. This is consumers inflation adjustments. This is small, but it is growing in an attractive way. This is very popular and famous for 3 coins of the Japanese fish, fish frequently find in the urban areas. So USS is the automotive retailer of the car auction platform. I also speculate that the automotive also going to be scarce because of the inflation and linked to the production linked to the full offshore production, and also because of the DRAM scarcity. RAX is application software. There's a back office administration software for and this is maybe applicable for labor scarcity scenarios. Fujikura, movie and sorry, this may be wrong. Sorry, this is a metal, and this is steel and ferrous metal. Large 70, the AI data center and the components. So we continue advanced test advanced silicon packaging. You see that and the testing of the advanced chip in there's heterogeneous integration of the silicon chip that integrated a lot of chips into the in the vertical ways, and testing this testing is very advanced technology required. So Advantage is one of the dominant company that supply this advanced testing devices for advanced packaging. The Kioxia is also one of the important data center solutions for storage. Anycolor is also is a Japanese IP business, and Sanrio and Capcom is also JIP. Sorry, this is wrong. SPI, this is investment banking and brokerage. But people try to hedge the inflation by investing the stock. So the SPI is also including in the CIF, consumer inflation adjustment. Market evaluation is like that. The advantage is possibly overpricing, and it's already exceeding the target medians and also the mean of the target price, but it's still room for the positive return in the target highest. Fujikura is also in attractive price, attractive outlook. And PAL Group is really good, really attractive investment return, even though the current is currently depreciating because of the sales not reach the consensus in this week. So new portfolio construction is like that. It's trying to change the market value is almost like that. So in stock is changing so that there's a lot of difference in the each price. So buying a lot in the small prices and that's buy few in the largest prices. So construction ratio is like that. Almost half of the portfolio is by the AI data center, AI and data center stocks. Almost total of the it almost and power USS like that. And Sanrio, Capcom, and Anicara is also more same portion compared to the power and combination of power and USS. Let's see, performance backtest TTM. Let's see, applied in the price appreciation of the price movement of the last 12 months. We also make the portfolio by excluding Advantage and Fujikura. Even in the less Advantage than Fujikura, the performance is above the topics. So let's see the forecast. If we apply the price targeting price lower of the median or the mean of the Bloomberg consensus, so most of the prices advantages may depreciate if the target price, median target price. So even in this, so we see that almost 80.88% gain by applying the target price in done. We see some comments for stock pick. Consider inflation scenario, so it may end up in mirroring expectations. So inflation scenario may be going to be moderate because of the interest rate hike by the BOJ, or some tariff may be relaxed because of the Trump administration checking out. Company absolute inflation may be doing a time lag. So actual scenario maybe end up in Trump always checking out or Takaichi always checking out. Semicon industry is still prospective, while NVIDIA new product release can be a risk. If the new Rubin and Vera is releasing disclosing the first half of the last year, and BlackBerry also disclosed in the almost same period in 2024. If this schedule is not met in the next will not met in the next 2026, it can be a risk. The policy rate change is no longer influential because the expansionary policy is most influential in the explaining the interest rate, while long-term interest rate is determined by fiscal policy contains sovereign risk. So thanks so much for presentation, hearing my presentation. So let's move to the questions. So let's see the questions. Okay. Q&A. And Hoe in prospect of AI. Okay, let's see. Question from Mr. Kwek Yong-won. Can tell us more about Nitto Boseki and Hoya in the respective AI theme? I see its name that it is fiber and some under seeing the prospect. They are also including in the AI theme, but I don't know the retail. I'm sorry for that. Thanks so much for asking. Outlook for Mitsubishi HI and Korean name for defense team. Sorry, this is still in the investigation. I tried to capture the difference, but it's really huge, and so and I also think about its profit margin is narrow. So I always omit the narrow profit margins. So this is less motivated about investigating these companies. I'm sorry for that. Thanks so much. So any Japanese ETF recommended? I think that sorry, this is my out of my research. Thanks so much. えっと、Daiwa HSE log travel listing in 2021 price went below the IPO price all the way since it's still down. Sorry, I don't know about this company. I tried I try to be inclusive about the overall sectors, but I don't know uh, about these companies. Thanks so much for asking. Do you have any comment? Or so what might be a situation with dividends by major companies? Well, Mr. Reina Shemi, what might be a situation with dividends by major Japanese company? Well, I think that the dividend is as I presented, Japanese company linked to the investment, linked to the corporate investment, and also for acquire the foreign entity or create the foreign entities. So it may be possible that the company going to be saving it and less going to less capital expenditure into domestic production. The dividends may be real for such conduct, but so that and dividends is also going to be going to the inflation hedging for so household investors. So if the company wants uh, more attract more household investors, they pay dividends. So I think that the dividend uh, and I see that the dividend sorry, see that sorry, so dividend payout ratio of Japanese company almost 30%. So it's not so bad. Um, so, but so it may be possible that in the next quarters or the next year, some increase of the profit may be reinvested into the corporate entities. Thanks so much. And in rising spending on defense, do you have any peak in the sectors? Well, this is the one of the known companies, Kawasaki Heavy Industry, but there's some concerns about its corporate governance. With heavy industry is like, but I still in the investigation for defense company. Thanks so much. Participation on dividend food. Do you have any questions?
Okay, I think that's
Yeah.
all for the question today. Thank you so much, Miss Misam. So, for everyone that is in the still in the webinar, before we end the session, we will have a feedback form for you to fill up on. So do fill up so that you can receive a promo code from us. Basically, it's a first come first served basis. So be sure to fill in your info accurately, and we will share you your stock coupon promo code. You'll receive it within 5 working days after the event ends today. So be sure your email address is accurate. Thank you very much.